Welcome traders, a big warm welcome to you. It's time to warm up a bit in the UK here. I'm going to get right into it. I'm going to start talking about fundamental concerns at the moment. So inflation is still very much on the tip of everyone's tongue. We don't have the kind of final confirmed inflation for January for the US. It's fine. It'll be on track potentially at around about 7 or above. We'll see how that goes here. We can just see if we look at the graphs, and my references are kept all below here at the bottom. But we can see how the US is obviously experiencing it, but it isn't necessarily as out of control as everybody likes to the media certainly wants to make out that it is. Also increasing tensions between obviously Russia and Ukraine, and this is a serious concern. We do have an increase of a rise of fascism and autocracy around the world, so we do need to be concerned about that. Even starting to take roots in the US as well, so there are some concerns there, which will of course cause major destabilization, so we need to be worried about that. But nothing out of the S&B about Swiss CHF intervention for traders, no concerns there. And the general market kind of correction we're experiencing now versus potential kind of inflation plus kind of growth. Nothing really worry to, at least in, for me, I don't think there's too much to be concerned about at this point in time. But just looking at there's certain areas where there's an increase in inflation. Obviously, there's a global increase in the demand for commodities and crude oils and stuff, which is not within the control of any one country. There are 190 plus countries in the world. It is a global increase in demand there, so it's not within the control necessarily of one country alone. Very much just the case there. So some concerns, nothing necessarily expected to unfold this week. However, when we look at the economic calendar this week, there is a lot of high impact news. I would expect lots and lots of volatility across the board. It can be good in terms of fast trading opportunities, but also maybe perhaps clues to maybe stand aside and be extra cautious. I would highlight here any non-farm out of the US, any major US news, non-farm employment changes here, as well as anything pertaining to rate or any responses from central banks towards inflation or responses towards fears of inflation even, language. And so actually, if you just look through this, just quite a bit where we're going to be talking about that, or where they will be talking about that. ECB press conference is going to be a lot of that this week. So for me, it'll be cautious around those periods and keeping an ear to the ground, mainly not because there's going to be any surprises, but more just because the market is going to perhaps create some volatility during those periods for trades. Day trading on lower time frames will there be spikes and perhaps quite a bit of slippage and all kinds of other. It gets really, really messy. Okay, let's go across and have a look at the charts. Check out the VIX. So what I would highlight here is just definitely this continued increase in spiking up, a bit of failure around the highs here, but definitely a change in personality from what we've been experiencing. In fact, all of 2018, 2019, 2020, this is different. So 2021 is likely to see a little bit more of that and almost kind of breaking through 40 there. I would expect more and more and more of that for this. It just means an increase in volatility. Could be liquidity. It could be a good thing, could be a bad thing in terms of, so it could be a good thing in terms of really nice long sustained moves. It could be a bad thing in terms of real kind of choppiness in the markets then. Have a look at the US dollar index here. So we have successfully breached 97. Okay, it's a really solid bullish candle. That usually to me would just imply continuation at this point. That monthly candle looking really nice and strong. I should actually start to add in the next levels, but this is now on its way up, continuing or pushing up towards 100. There's quite a few levels to go through on the way there, which would involve some potential retracements and continuations. But for the most part, it looks very much as though this is just dollar strength continuing. And we've been talking about this actually from the lows around about June last year, saying that we were at the bottom of that potential range. Here we go, bottom of this range, and therefore a move back up to the top is certainly on the cards as a possibility. I would say now the area we're in is going to add some increased volatility here around that 97, 98 level. Once we break through that, there'll be a continuation up towards 100. Okay, looking at euro dollar, US dollar, I'll be looking for pullbacks and continuations to the downside. That's my plan A this week. Broken through 1.12, 1.11 is down, is the next sort of major level there. There are some possibilities of corrections to the upside as well before continuing to the downside. Yeah, looking at sterling. Sterling, these kind of ridiculous moves all the way up and then all the way down, that stuff is all very new. As in, moves like that did not really exist, not in my experience of the currency markets. They started all around about the 2014 period of time, but it's very much sustained. It seems normal now, so it's almost as though 4 hours really where a lot of the clues are. Currently, this looks more bearish than bullish. It is actually at a major level of support and resistance at that 1.32 level, and so it could change directions, but here at this point, because we have that lower high, it is looking to me as though it's a continuation down. So same thing again, I'll be looking for shorting opportunities there. Aussie dollar, US dollar, Kiwi dollar, US dollar for me are looking beautifully, really nice and weak. They're actually on my cross pairs of interest as well. That monthly candle, look at that really nice kind of bearish setup there, almost a continuation to the downside. It does have to break to the 0.7 level, I think, to continue, but almost all of this points more to that than anything else. It's a bit overextended on the daily, and I think any bounces from here are possibilities. It's a possibility it can continue through and pull back, but I'm looking ideally for this to keep going a little bit low. Even if there is a bit of a correction, I want to see if it can continue doing that. Kiwi dollar, US dollar, look at this. Really, really, really nice, strong moves. That 4 hour looking very, very nice. Quality of that optimal price action. And pullback here, we are overdue for some retracements, some potential corrections this week before, and looking for continuation trades. Dollar yen. So dollar yen, as usual, is doing its own thing here. It looks a little bit more bullish than bearish. The only thing is that it is prone to just doing its own thing. So some caution there. It looks at this point in time as though it's supporting a stronger US dollar. Dollar Swissy here showing a very strong bullish engulfing candle there. I can't see why it wouldn't. If it can just get out this little soft range of resistance here, why it can't continue up to 0.94 and a little bit higher. Dollar CAD. Dollar CAD, similar to GBP USD to cable. It's due, just looks as though it needs a little bit of a correction, but also at this point is looking more bullish than bearish. Got some resistance in the way here on the weekly. If it can get through that, I can't see why it shouldn't be able to continue to the upside. So we've got a lot of news, and therefore it is possible that markets can get rejected off these key levels. It just adds up. A lot of news, prices at major levels. I think it's going to be very, very tricky, but also there could be some nice moves. If they can break through levels, they can continue up, and so there could be some good opportunities there. Onto the cross pairs of interest, look here for pound Aussie. So that was also my chart for a while. Continuation to the upside. Did pull back, managed to do a really solid breakout and continuation to the upside. It's now at another major level, of course, typically, but overall, principally still bullish on this. So continuations, pullbacks, and breakouts to the upside there. Aussie yen. So Aussie yen has got just a very fuzzy level of support that it's sitting on here, but I like the idea of looking at trading this to the downside. And then, so Aussie yen, I'm going to go straight to Kiwi yen, which I also like. Kiwi yen also looking very nice. Having broken through recent levels of support here, continuation trade certainly down to 74.50 overall. This looking really nice and bearish. Going back up here to Aussie CAD. Aussie CAD also having broken through a level of support. It's got 89. 0.89, it can bounce off that, so there could be a possible change in trend to the upside. But my plan A is continuation trade. So pullbacks into levels of resistance and looking for shorting opportunities. If, of course, it just slices back up through this level of support, comes all the way up here, breaks these highs, then I'm potentially looking at longs and then going straight to Kiwi CAD, same idea. But this is just this is a thing of beauty, strong breakthrough level of support. Just, I actually missed a few of these. I've been trading just a lot of other stuff. I missed them, but these are things of beauties, and there's some really clean, clear, even some swing trades actually happening here on the daily. So some good stuff. I'll keep an eye on these major levels. I'll update these for next week's video. But yeah, so I'm seeing some opportunities across some of these markets, but the risk then is it is on Aussie pairs, Aussie crosses, a lot of those, as well as Kiwi crosses. So there is some sort of grouped exposure, and therefore I would take that into account with my risk calculation and my risk management plan. Okay, so now look at the S&P's Global Commodities Index. We can see overall commodities on the rise here. Large parts of this appear to be driven by the crude oils. Okay, we can see some of those looking quite nice and bullish. Having broken the highs, continuation makes sense to me. Look at gold. So gold, its general messiness continues. Okay, so if anyone is kind of convinced that gold is going to be something that's just going to shine through, there really aren't any signs of it here. It does indeed have to break above that 1834 level, has to break through of that, then go through that 1900, and then it can start to work its way up to the highs. But for now, not really doing that. And so there's a break of this uptrend. There's no fixed uptrend at this point. Very messy. Yes, there doesn't mean there aren't short-term day trading opportunities on it, but just very kind of choppy and dangerous, and therefore got to trade aggressively, keep that tight stop loss, lower risks, and also capturing profits a lot faster or taking profits off the table. Copper here, just a mess as well. It's following through. So we could see that commodities took a bit of a hit this week, and there's no doubt that if equities take a bit of a hit, commodities do as well. No doubt we could see this very highly correlated. Moving on to crude oil. So what I would just highlight here, unless this is a data bug, this is just showing some strong exhaustion at this point in time. That weekly chart looks fine. Nothing it's a bit of an engulfing candle there. It's also a bit of an indecision candle. But the monthly looks really nice and strong. The question is, can it stay above 85? I'm not seeing any signs that it shouldn't, but that daily looks like it's taking a bit of a breather here. There's no doubt there's some strong resistance here around about that $90 mark. Weekly looks okay. Look, there can be pullbacks at this point in isolation. That is worth that. I would say that that's now due for a bit of a correction there. Corrections down towards $80 looks good. That monthly looks really, really nice. So potentially here this week, some possible corrections on the daily retracements before continuing. I lean a little bit more at this point in time. Okay, I'll keep an eye on that level there, but at this point in time, I'm leaning more towards continuations to the upside. Okay, if we can't get back over that, then we'll deal with that. But for now, I'm looking for continuation trades to the upside. Sugar. All right, so sugar just continuing its slow, crazy drip to the downside there. Not really pretty, not really safe for trading. Also looking here at coffee. Coffee largely very messy and noisy. It is exhausted and it really needs a deeper correction. But the problem is that it's obviously becoming, as a result of climate change, the area in which coffee can grow is becoming harder and harder, or smaller and smaller, that area. So I found like there was a bit of a that's what she said comment. So just being a bit cautious there. But so therefore I see that there's a strong demand, but it's definitely over at the moment. It is just needs to have a bit of a correction there, and we're just struggling to get over this 800 mark, just really unable to get through that. Struggling. I need to see a solid break above that solid close, and perhaps that's not going to happen in January. Cotton. Oh, wow. Still really nice continuation there. A bit of consolidation and then a continuation. So breakout, pause, and a continuation. So for now, I can see again that's also slowing down a little bit where it is here. It is similar to crude oil on that weekly. Can do with a bit of a correction here, but overall nice and bullish. So me again leaning towards those either a weekly correction or at least continuation, pullbacks and continuation on the daily. Okay, so now arriving at the global indices. Having a look at the Dow on the daily, very strong, lots of buying coming here, pushing up, finishing up near the highs on the end of the day. That weekly candle looking very strong and very bullish. So what this tells me is intent. Lots of intent, attempts to push it back up to those old highs potentially coming in this week. This 4-hour area going to be a very interesting for me consolidation, potential consolidation breakout. So some very interesting possibilities this coming week. Monthly is not really revealing itself. That looks like it's pretty much going to be it for the close, unless we have a spectacular drop this coming Monday in which this candle closes near the lows. This is likely to be that finish thing. So taking into account that Monday could result in a big drop for whatever reason and therefore change the January candle, that's a possibility, of course, across the board. But let's just say that it doesn't for now. S&P also very strong, very bullish recovery. Lots of buyers in this area. The question is, are there enough buyers here to get it back up to those old highs? But this is not actually as strong as a bullish finish on the S&P as I would have expected. But that level of support at 4.3 potentially holding there. So that's a good sign for me as well, not hugely a sign of weakness. Looking at the Nasdaq here, has had it's shed off a lot of weight. It's back into this area, 14,000. Looking good. Overall, similar response. I want to see this week. My first thing I'm going to be doing is looking for a consolidation breakouts on all of those on a 4-hour time frame to see if that's a sign of it being able to recover and do that. And so what could actually be interesting is if I just go back to this is a possibility, and I want to give some sort of frame of reference for my thinking here, that in the past we've had some corrections here. Where was the one that I actually saw that I quite like the look of? We've had situations here where we sort of produced a bit of a bearish candle, and it's been in the past. We've had something, let's take, for example, this look here, December 2018, followed by a bit of a bullish inside candle. So it would be very interesting to me if we did get a small bullish candle for the month of February, which is a short month. We got that over here. That would be a potential signs of a continuation, and we go from there. So I want to highlight that as a possibility in terms of what could happen here if this doesn't fall much lower and does indeed produce a bit of a bullish recovery on that side. So that is something that I'm certainly going to be keeping in mind, and that could happen across the board. There could be a nice little one here, especially to me. What would be significant is the Russell getting back up above that 2100 level, getting back into this range would be very interesting to me. Yes, we could continue down, of course we can, but I tend to, again, it's innocent until proven guilty. I tend to give these markets every opportunity to recover. Looking at the FTSE, so moving on away from the US, looking at the FTSE, that's just a very interesting bounce to the upside. Indecision isn't really a bullish strong finish, not certainly as strong as one would hope. If we're going to get further downside across the US markets, then this is going to reveal itself. It'll find that the market starts to slip lower this week, but that monthly candle also looking pretty happy and pretty ready to continue either way. It's an indecision one, a little bit of bullishness. It's slightly stronger, not necessarily that weak. And then looking at the DAX, DAX is still within its range. So if this can find support in this area and stay within this range, I'll be quite impressed. It actually has managed to do so in the past. And so it's one of those things where, yes, I'm accepting the reality that the markets could drop a little bit lower, but I'm also saying, look, they're not inherently weak because they've certainly managed to recover really well. If they were that weak, would they have been able to recover that well? And so, again, as I said, we could look back 18 months from now and see that this was the beginning of the market starting to really like perpetually run out of steam, and therefore that was the beginning of that kind of the end of the bull run. But aside from fears of not even inflation, but more like fears of conflicts, I'm not really seeing much else here. I'm seeing a lot of potential spending. The inflation is a consequence of spending, and therefore there is still some money to go. You know, people are still changing jobs. There's a great migration. There's a whole lot of stuff. Inherently, I think it's more stable than we might think it is. There just might be a lot of companies that are not necessarily offering value and therefore shedding that. They're starting to reveal. I love it. It's Warren Buffett's expression of you really see who's naked when the tide goes out, and that's the kind of scenario that I think we're potentially experiencing here. So it'll be interesting to me to see if we can get a bit of a push up here. I need to work through this a bit faster. I'm going to run out of time. I'd especially, again, also like to see if the Nikkei can get back up. It's been consolidating here. It's still in a relatively good area, and similar to the DAX, it could find its way breaking out and hit a little bit low. That's not a strong finish on the monthly candle. That's more of a bearish finish here, and that does show that perhaps it's not going to be able to get back into this range. So to keeping, both plans in play, but I'm just highlighting the possibility this strong little bullish candle in February could be what's needed to see a bit of a recovery and see the market starting to climb a little bit higher. So that's the S&P out of Australia. It's broken to the downside. It's managed to bounce. What I want to see this week is, does it continue to the downside? And again, that those consolidations on the 4 hours, do they break to the downside? Do they break to the upside? Is going to be a big clue for me as to how the week is going to finish. I'm leaning just a little bit more towards it. Certainly, I believe the markets are going to try to go higher. Of course, they're going to try to go higher. And if they can break out of those consolidation breakouts, they may well actually succeed in doing that. Royal Mail. So moving on to the equities of interest, for me, we could see Royal Mail still has that potential to go down a little bit further, and possibly even go break a little bit below that and continue low. It's not in this case not looking. It's either about to go into a range or it's potentially going to continue to drop in value. It's not necessarily looking that strong. Amex. So I'm actually managing to push up and close right up near these highs here. That is an insanely bullish engulfing candle. Really strong sign here. If it can hold and there isn't a drop of money, it can hold or break and close a little bit higher here. For me, that then shows actually it's consolidated here and it's ready to continue to the upside. So very interesting to have a look at that. Apple, needed to let off a bit of steam. It's done a little bit. It's done the minimum amount. It's still got a really nice, strong weekly candle here. This is also a particularly bullish weekly candle here. It's a continuation candle. So that I find particularly interesting, and let's see how that goes. Overall, again, any drops down here are fine. I think they're healthy drops, but this looks to me as though it's pretty much done with that at this point in time. Wants to attempt to continue ARC innovation. It's very nice to have seen how it's let off quite a bit of steam here. It's back into this area. So for me, this is a bit of a buy area. This is where I find this relatively bullish. So for now, and that's not conclusive, by the way, I'd need to see a bullish candle here to feel that there's going to be a swing low here. I'm not seeing that. So this is hinting at a possibility of a continuation lower, but it could also turn at this point. Indecision candle can be a sign of that. That is certainly putting on the brakes on the daily. It's going to attempt to hold where it is and push higher. Let's see how that goes. You can see that 4 hourly starting to put in a bit of a double bottom there. So yeah, let's see how that, if it succeeds in doing that. AT&T giving back quite a bit of the gains they managed to do here. Increased volatility. We'll see how that goes. Heavy sell-off at this point, but still more bullish than bearish. So we'll have to see how that goes. We've got a 4 hour in a downtrend, daily in a downtrend. No clear trend on the higher time frames. So we'll have to see how that comes out. Berkshire Hathaway, beautiful. I mean, okay, that was a faster correction than I would have. That's not a healthy one to have a breakout like this and then correct almost immediately. Usually it would come several candles later, but it did. It's a breakout and a retest and a bullish candle. So this one I'm going to be looking for this week is a break of the high, this and a continuation up to these highs. So the monthly candle looks fine. Overall, that looks really good. So the question is there something unexpected this week that's maybe going to knock the markets that hasn't already come up that's going to knock the markets further? We'll see how that goes. Monthly candle here on BP still looking good. Again, that's tied to, same as Exxon, that's tied to those commodities. Look at that. Solid breakout into these old areas of resistance, but similar to crude oils, it is now in this area, and I think that it's worthwhile. I think it would be prudent to mark this as an area of resistance. I'm going to include these over here as well. So this could run out of steam at the highs here and could end up staying in this area. We'll see how that goes. Going back to Coca-Cola, solid breakout. This has absolutely contributed to Berkshire Hathaway's success, no doubt about that. Really nice continuation. Hasn't even connected with the moving averages. This is desperate to keep going. It doesn't mean it'll necessarily get back past these old highs, but it is very keen on doing that. ExxonMobil, we've had a look at. General Motors, I always do that every single week. I should just reorder these and do that. Wow, solid rejection here on General Motors. This is a toughie. I kind of feel that this kind of a signal here says I'm going down to 40 here. So I'm going to mark that because that is, generally speaking, a heavily bearish signal. But at the same time, it hasn't left this range. There's a little bit of a range here, and so I have to mark the range as well, to be fair. But that kind of a signal usually means a continuation to the downside. Okay, so that's going to be interesting to me. I'm just going to mark it here. We'll see if that's going to be the case. It's not a given, but that particular signal is very, very bearish. And just chuck in a little bit of a question mark here, because certainly I think that that's an incredibly bearish rejection sign, and in most situations that means I'm going to take a bigger breather down to here, down towards 40. So we'll have to see how that goes. Okay, JP Morgan Chase. Also, this one is okay. So in other words, this is now an area where it's going to perhaps try to find a bit of support in that area, stay above that 144 mark and see if we can do that. I was actually hoping this would come back and connect to the old highs, but it doesn't have to do that. It's in an area now certainly where there's a possibility of it stabilizing. And in fact, I'll tell you what I'm going to do. I'm just going to mark it like this. I'm just going to say, look, this is an area where that can happen. We'll just bring this back a little bit, but that is the right area for it to kind of stabilize and continue up there. Meta. Facebook. Okay, so yeah, it could hold. It is now at the old highs. It could do that. If it breaks to this level, I would say this week, it's certainly going to try. It's got high lows here, but this is just a triangle here, so it could break out either way. It could hold. I would say if the rest of the markets hold, it's going to be able to do that. But if it is unable to, the next one down continues down towards that 250 mark. I think it might be able to hold. And looking at this as well, so Morgan Stanley is looking really particularly bullish to me, at least on that weekly time frame so far. But we've had something similar with one of these as well, the other equities of interest. We've seen one of them where it consolidated and eventually just kind of gave way, and that is always a possibility. But at this point, certainly look at that 4 hour, that's an uptrend, nice bullish, that's going to take another run at the highs, but it's got to get through that resistance band, and it's not free of that yet. So maybe it'll work its way up to the top, but stay within that. And we've now got NVIDIA coming back down, to me at least, within a really, really nice area here, point of interest. It seems to be stabilizing. That's a nice little bullish indecision candle here. That could be a potential turning point. Again, kind of it's just dropped below that old high there, 230, back down to these levels, lows. Yeah, we'll see how this goes. So this is what I would like to see, is February producing a small bullish candle here. For me, that would be a potential turning point. Signal to me as a buying opportunity. Okay, PayPal back down into this area. So I'm just wondering why I marked that as resistance area. PayPal having coming down, fell through 175. It's continued down. It's back now into sort of close in towards the 50 moving average. It's done that in the past. So, and as crazy as it sounds, it's not necessarily a bad thing here. It's starting to build up a bullish breakout pattern there. It's starting to look more bullish than bearish. It's overextended. That looks like that wants to, if nothing else, wants to go back up to 175. Can it get back over that? Can it get back over these highs? That would then signal a change in direction for me. But if it can't get back up and stay above 175, that could be a continuation to the downside. So I hate to say it. I need to see it break above these highs here, break above 200 for me to say, okay, it's starting to stabilize, and also break above these old highs for that to be then the lows of PayPal. It's in the right area. It's in a really good area to turn around there. So I'd like to see how that goes. Okay, Spider. Also, this one having consolidated in a good area here to continue, and then actually instead broke and fell lower. For this one, my concern here is it's still got a bit of room to go. It's just broken back into this range. And I think, again, it's also worthwhile marking that range there. It's definitely in this area where it may look like it's only going to find some support a bit further down. I need to see a bullish candle here, and this one I have a funny feeling, although it is also forming a double bottom here. It's attempting to turn around, some bullish divergence there. We're going to see if it can succeed in doing that. Let's go on to Tesla. So Tesla, I've spoken about. These are my areas. Sorry, I just marked these for myself. These are 2 areas for me of potential turning points for Tesla. So this area, meaning that if it turns here, this is certainly the minimum requirement for me that it would turn. If you do Fibonacci, for example, you get your 382, you get your 618. This would be similar to that. Okay, so either a major level would be for it to produce a nice bullish candle here in February. Alternatively, if it is unable to hold, this is really for me going to be where my next buying level is. And I've actually previously had marked this blue area. That's also a potential turning point. But for me, on levels, when it comes to specific levels, excuse me, these are the two areas where I focus on that 900 and about that 600 mark, but anywhere from the highs or lows of this particular area. So for now, it's back down below this. It hasn't found support at 900. It's okay. It's had a really good run, so it is letting off much needed steam. Okay, it's overvalued, needs to come back down within sort of closer to where true value is, and let's see how that plays out if it can hold for this week. So in other words, if February for me produces some nice strong bullish candles, that to me is going to be a great sign of optimism for growth as we head up towards, say, May. Okay, Vanguard on the list. Very small, healthy correction back down into these lows here. Strong weekly candle. This is a monthly, again, these are all monthly corrections. That daily looking nice and bullish, also building up a bullish breakout pattern there. So again, there's a lot of, there's a bit of hunger in the markets. And I was going to say there's a lot of bulls, there's a bit of hunger. Can they at least get it back up to the old highs? We'll have to see how that goes. Okay, moving on to the Treasuries. So Treasuries broken below these lows, but they are now producing more sort of bullish signals here, looking more and more bullish, certainly back up to the top of the range, but not a lot of interest in buying them. And again, I still feel that that's not really a sign of any fear in the markets at this point in time. There's just not much interest in them. Okay, the Euro bubble, also not a lot happening, still at the bottom of its range, looking not strong at all, not much interest there. Euro bunt as well at the major level of support in the past within this range, could bounce up from here, but again, not looking like there's any panic buying or any shifting across to those. Okay, finally on to cryptos. So cryptos, again, for me, I've done a similar thing I've noted on a high. It's on a much longer time frame. I think that, Bitcoin, I've rearranged the list, by the way. I've reduced it down to 5. I feel like doing a lot of them isn't necessary at this time. And I've updated it, including Binance and Solana as well. And so, yes, the really good levels of support in this potential area here. It's actually held. My expectation would have been that it would connect with 30,000. But if it doesn't and it produces a swing low here, that overall speaks, that's a good sign for me, at least, that it's going to work its way back up to 60,000. So that's what I want to see this week. This is a very nice downtrend. It's in a really good area here to continue to the downside this week. So alternatively, if it just smashes through that and breaks these old highs, then that is to me going to be a sign it's going to start to work its way back up to 50K or more. It's not looking that strong at the moment right now. It could continue down. If it does continue down, 30,000 becomes my next mark. Then having a look at Ethereum. Ethereum looking good as well. It's a nice little high low here. It's a good area for it to find some support. Once that starts to work its way up. But overall, although it's got some signs of bullishness here, it's still within a longer term downtrend, and therefore it's got a fork in the road. Isn't clear just yet if it's ready to recover, and it is attached to equities, so it can only really get all of its members on board, so to speak. All of its kind of, the bulls can be on board or aligned, where the interests are aligned, when equities are back on the field, ready to play and bring their ball back to the field. Okay, Binance. Same thing again, it's down here at a level, close at a level of previous support. It's in a nice little area. Certainly on a weekly basis, it can find support and carry on up here. There's the top of the range. It's pretty much the same situation. Solana, let's have a look at Solana. Very nice, big move, nice healthy correction. I'm looking for a nice small bullish candle here in February as well. It's looking like it's producing a series of high lows into this, and it's going to attempt to break to the upside. It's got to break these previous highs and to actually break this downtrend structure. And I need to see if that's going to happen this week. And again, that's tied to how equities feel. And we've got Cardano's back into this area. It's back down at these levels of support here. So far, looking okay. Again, if equities are going to fall further, it's likely going to drag cryptos down further. So all eyes on equities this week, and trading with some caution. Lots of volatility. There could be some good things. That volatility could create a real nice boost to the upside, which then sets the tone for a really nice big move up towards May across quite a few of the markets. Alternatively, if there's a lot of fear for whatever silly reasons coming to the market, and hopefully not war-based stuff, then I would expect the markets possibly to take a bit of a move low. So let's see how that plays out. I'm going to exercise quite a bit of caution this week. Thank you very much, ladies and gents. Have a good one.